Hi and welcome to Wednesday's daily live trading review. It's been a very interesting day today, and some days you can only trade what the market offers, but today's been interesting, so I hope you listen to this and take what we have to say, because it's quite important if we do say so ourselves. I mean, obviously with day traders, there's some thought of saying that day trading is the most difficult way of trading, and we don't subscribe to that. And in a way, there's no right or wrong answer to that question, but some people say that intraday trading is the most difficult form of trading, and that's fair enough. But we use that to our advantage in a way, but you always need to be aware of the bigger picture. And this is a chart sent by Mark, who's stocks to 31 on Twitter, who keeps us updated with the bigger picture, which is much appreciated. And he's quite right. There's nothing wrong in looking at the bigger picture. The market's getting squeezed into this wedge. At 5,900, we all know it's been bouncing off this all week, well, for the last 2 weeks. If anyone that's followed the last few videos will know. And the market's not going to stop up here forever. It just can't. It's going to move one way or the other. It's either going to go up or it's going to go down at some point. Once you realise that, and you realise you can't control it, then you can learn to use that to your advantage. But it is always well worth watching the bigger picture. It's like in this chart now. If it's just without the lines on the chart, you can tell that if it breaks above 5,900, there's not a lot stopping it up to, well, I'm not drawing the lines, but it's about 6,000 basically, another 100 pips. So you have to be aware of that, and you're also aware if it breaks below this ascending trend line, then there's not a lot stopping it, because it's going to fall off a cliff, or potentially fall off a cliff. So you always need to be aware, even though you're trading on the 5 minute or the 1 minute or the whatever chart time frame you want to choose, then you need to be aware of the bigger picture. It's not telling you. I must admit, I had a conversation with Mark, who sent me this chart a few weeks ago. I think I've known him for 3 or 4 weeks now, and he was actually trading intraday off this chart, and that does not work. You can't do that. And even I think he'll admit that we've shown him that it doesn't work. You use this as an indicator. It's almost like this is your sort of top level guidebook. If market breaks above these levels, etc., etc., or it's going to move because it's been squeezed into this wedge, but then you use the actual time frame you want to trade on as your actual roadmap, for want of a better word. So you just need to be aware of the bigger picture. And again, thanks very much, Mark, for taking the time to send us that, and keep them coming. We much appreciated it. So again, today, it's been very interesting today. We've had lots of banter flying around on the internet and in our room and stuff, but basically we're playing the same game as usual. We've been doing it for the last 2 weeks now, but the more we play this game, the more dangerous it gets. And we always use this analogy of the more times you bang against the door, then the more likely it's likely to break. And because you've been hammering it all the time, the more likely it's likely to break with a bigger effect than than if you just hit it once and it just falls open. It'll just go oof, and that's it. It won't be a surprise. But if you bang it 20 times and then it moves and it breaks, then you'd like to be surprised. You'd like to rush through and see what's on the other side. So be very, very careful. So overnight, we had a retest of the yearly highs, and you can't judge these overnight prices. And again, some people get hung up whether, these are time to trade charts, which are capital spreads use, but they use, I'm sure other spread bettors use them, but they're not the same as IG. And some people get hooked up that, on your charts it's showing that you got to 59.22 and my chart's 59.19. I don't care. The whole point is it's not about this value. This value is irrelevant, really. The only thing that's valid is this is relevant to something else. So yeah, it's broken up through the previous highs, because time to trade charts have been bouncing off 20 for that's 5 times I think this year now. No, 4 times. This is the 5th I think. But anyway, it doesn't matter. You can work it out for yourself. But don't get hung up on a few pips. You're trying to work out what the market sentiment is, not to the pip. It's not an exact science. If it was an exact science, we'd all be millionaires. So this overnight, yes, it comes up, respected. Comes up, respected. You know, the market, I'm not going into dividends because that's a total another subject, but the market quickly wiped off the negative 20 pips that the dividends caused last night, which will be the subject of another video, but anyway, not for now. So the market goes up on the open, bang, short. We didn't take this because, to be honest, I was half asleep, but you know, but it was a very valid trade. Comes up, bangs around, comes down, goes up, bangs around, comes down. I mean, you don't need to be a rocket scientist, regardless of the level, to work out that if the market breaks up into here, then you need to get out. If it doesn't, then you need to go short. You know, you don't need any other analysis other than the price. You don't need any other indicators, MACD, RSI, whatever. They're not going to show you the same thing. The price is the price, as we say. Anyway, I'm not going to turn this into a rant. But we did think, you know, the more times it bangs against this level, the more chance it's likely to go up. So we did put a public on Twitter and in our room and stuff that, you know, be careful at these levels. You know, because it's more likely just to, you know, because market makers know about these levels, obviously. You know, they know people are going to be short. Well, basically they're either going to be short, or all the people that are short have got the stops above these. But this is not Forex. Forex, the market has probably moved 20 pips up, shaking everybody out and then gone down. But you know, this is why we trade indexes. Tends to be a bit more open and honest. But at lunchtime today, when this peaked up here, you know, what happens? Oh, the Greeks, there we go, the Greek news comes out. You know, maybe, I mean, there's been some confusion whether the meeting today was cancelled because the paperwork wasn't signed or whatever, and no one really knows. And you know, I was watching the IG seminar today, which I've been meaning to do for a while now, and it was actually a lot better than I expected. I think it's David Jones. He's at David Jones _IG on Twitter, and I was quite impressed. Not because it was all corporate, you know, we expect that, we know what he does for a job, but and I don't really, you know, I didn't really well, I'd say I don't understand. I didn't really need the market reviews, and that's not to say that you shouldn't listen to him, but I was quite impressed with his Q&A because his natural side came out, where it was like, well, not forget about indicators, but what are indicators showing you? Price action. And I was quite impressed with that, to be honest. Anyway, I tweeted that, so that's enough of that. But anyway, this news came out. Now, Greek may possibly not get the bailout. What are you going to do? You know, the market's only going one way from here. So we just said, look, anyone. I mean, I know we put on Twitter, and I think we had about 20 people in our room at the time saying, anyone that goes long is going to get, you know, is going to get banned. You do not go long when you're at yearly highs, and then the Greek news comes out. You know, who's going to be buying? I mean, we normally say who's going to be buying up here anyway, but when you get reinforced news like that, then you'll be short all day. And I know, you know, a couple of people were short all day, and I think they took about 60 pips out of this market. But for various reasons, we weren't trading today early on, so it doesn't matter about what we do. It's, you know, this is about what other people do, helping other people. So market comes down. You know, always, you know, as a day trader, the first thing you need to decide is, what do you think is the market going to do today? It's been range bound. We all know it's been range bound. And then, you know, the market's been testing the highs, teasing the highs. For people that don't know what they're doing, we've been buying up here. Get bad news out of Greece. It's only a rumour, I know, but was it, you know, whatever, I can't remember what they're saying. Is it about buying the rumour and selling the fact, or vice versa? Anyway, it doesn't matter. As soon as you get this negative news out, there's no one that knows what they're doing can be buying up here. So you just look for shorts all day. Look for pullbacks. You know, we've got a wash and wiper 0-0 here. It comes down. You know, average US news. You know, trade with the market sentiment intraday. Yes, be aware of the bigger picture, like Mark's chart. You need to be aware of the bigger picture, obviously. But you know, we're only trading intraday. That's what we do. So we're not here for weeks or days. So trade with the sentiment. You know, if you miss all this, there's no entry up here. I mean, the best entry was obviously up here, but if you miss all this, then wait for a pullback. If you're interested in the short time, you know, because we're in the short because of all the news that's come out. Test and fail at 0-0. We all know that 0-0 are big numbers. Lots of people look at these numbers. Computers look at these numbers, 50 and 0-0. It's not rocket science. What happens? We get a sell-off, come back up, we get another sell-off, it comes back up, we get another sell-off. And for various reasons that I don't need to go into on this, we didn't actually trade till this area here tonight because, well, as I said, I don't need to go into that. But but even this, and again, we know 75. If you look at yesterday's video or our blog, well, this is our blog post now, but 75 to 20, it's been the range for the last 2 weeks. What happens? Price comes down, breaks through 75, comes back up, test, don't want to go any higher. We're all over this short. We made decent money in this bit here. We made back what we needed to make back. And it wasn't a vengeance trade because the market showed again what it wants to do. And we would not bet against it hitting 50, but it'd probably be out of hours now. So, yes, you need to be aware of the bigger picture, but you also need to be aware of what's happened intraday and why it's happening. Don't go against the intraday trend. If you do, it's at your peril, which I know a few people today have done, and they got burnt. It's a percentage game, it's trading, so make sure you put the percentages on your own side. Don't fight it. I think that's it. Thank you very much. And as usual, have a look at the website or Twitter at FTSE Day, or any questions, then just send us an email, traders@ftseday.co.uk, and we'll get back to you. Okay, any thoughts or feedback, most welcome. And trade safe, and I'll see you tomorrow. Thank you.